Hey everyone, welcome back to the channel. My name is Isaiah, and in this video, we're going to go over the upcoming week. So, if you watched yesterday's video, I posted that we have made over $20,000 year to date. We collected $760 last week. This is an income generating account where we sell options such as puts and covered calls. When you sell a put, you're agreeing to buy a stock for a predetermined price, and when you sell a call, you're agreeing to sell a stock for a predetermined price. Here's a visual example. I have a Hertz $5.50 put. That means I agree to buy Hertz for $5.50 a share by the selected expiration date, which is 7/11. They paid me $44 just because I agreed to buy this stock for $5.50. As you can see, the stock is trading at $7.28. So, when the stock is that much higher than the price I agreed to buy it for, you really do not have much luck rolling the position. But my favorite way to trade is to open a position and then just roll it for months on end. Unfortunately, like I said with Hertz here, if I would go to roll this position out to maybe August 22nd, a month and a couple weeks, I guess if I rolled it out that far for the $5.50 put, I would get paid another $33. So all I've done is change my expiration, and then I collected $44 from opening the position, and another $33 just by rolling it. I'm still agreeing to buy it for $5.50, but I am changing my expiration date to, almost a little over a month out. Give me another $33. That means I'd make $77 for my original agreement of contract to buy the stock for $5.50. So selling puts, very easy way to generate income. Find a stock you like, sell a put on it, meaning you're agreeing to buy it. It's as simple as that. We have next week 1, 2, 4, 5. We have 5 contracts expiring next week. But a couple of them, like Iris Energy, I agreed to buy it for $7.50, and I got paid $32 for it. And I also agreed to buy it for $8, and I got paid $64 for it. But unfortunately, the stock just ran up so high. I mean, look at that, $17. If I try to roll this position, what happens here? Yeah, we go out. Let's go to the 22nd, and we keep that $8 strike price. Look at that. It's so much lower that the chain doesn't even go down that low, which means I'm not going to be able to roll it and keep that same strike price. Now, when you roll a position, there's no rule that you have to keep the same strike price. I could roll this position and increase my strike price, the price I'm agreeing to buy it for to $10 or $11 or whatever. I'm not going to do that. I will just let the contract expire worthless, and I'll find another couple plays to work towards to generate some income. So not a big deal. But all in all, next week, the only position I might be able to roll is the Riot $9 put. The stock's trading at $12.19. Let's see if I would try to roll that out. Let's go August 22nd. We'll just keep with that timeline here. And it's a $9 put. Oh, yeah, look at that, $1. I'm not going to get anything. So I'm probably going to have to open new positions again next week. That's kind of the downside of bull markets. Everything runs up, and the biggest thing with put selling, it's really as simple as agreeing to buy a stock for a predetermined price, but you need to find the price you're okay with owning that stock at. For example, I love Iris Energy. Love it. Love it, love it, love it. I've made quite a bit of money on this stock selling options. But I don't love it at $16. It's trading at $16.94. I do not love it at that price. When it comes back down again, and it will, the stocks go up and down. That's how they work. So don't get too excited when the market's up. Don't get too down when it's down. The market goes up and down. And that's why we sell options, where we're agreeing to buy or sell a stock for a predetermined price. Let me show you the example of a covered call. So I have an AEHR $10 call. That means I agreed to sell it for $10 a share. I agreed to sell it for that price. I own 100 shares, and I agreed to sell it for $10 a share. Well, it's currently trading at $15.62. Here's the thing that confuses a lot of people. They see this total return, and they're like, oh my gosh, I'm losing money. You're not. You're not losing money. That is called potential money. What do you mean? What's it mean by that? Well, because I sold a $10 covered call, I locked myself into a contract to agree to sell the stock for $10 a share. Simple enough. Well, no matter how high the stock runs, you still have to sell it for $10 a share because that's what I agreed to do. I agreed to sell it for that price. So I miss out on potential opportunities in terms of how high it can run. That's okay with me because, again, I agreed to sell it for that price, and because I did that, I got paid probably like $60, and I have rolled this position a lot. Let's see how much money we've collected on puts and rolls on this position. We won't look at all of it, but we'll just right there. Look at that. Opened it, collected $30, rolled it, collected another $34, and rolled it again, collected $58. So that's about $108 right there. And however much I collected when I sold the put, because how I do things is I sell a put, meaning I'm agreeing to buy the stock for a predetermined price, and I do that until I get assigned. You get assigned if on expiration, after the market closes, the stock is below the price you agreed to buy it for. You still have to buy it for that price, so you own 100 shares of that stock. So I do that until I get assigned, and then I sell covered calls on the other side to capture more income. It's, in my opinion, the infinite money glitch. Again, that's not financial advice. That's just my opinion. The next part of the video I do want to talk about, I have two things I want to talk about. I did start using Twitter or X, so I'll put my username in the comments below. Drop me a follow on there if you want. And then I also have a Fiverr where I sell courses on how to sell options. It's an educational course, not financial advice. Same as my YouTube channel, not financial advice. But I do provide every trade I make, and also I go over the terminology and the steps to sell options. So I think it's a lot of fun. I think we can all grow together there. So check that out. And then the third thing, if you're looking for a brokerage account, I do recommend Robinhood, especially for beginners. It's easy to navigate, easy to understand. I do have Fidelity and Webull. I definitely use those as well, but Robinhood is, in my opinion, the easiest one for beginners. So with that being said, I do appreciate each and every one of you taking the time to leave comments. It feels great. The subscriber count's over 1,900, and I've had a couple people actually ask if I'm getting paid on YouTube yet. No, no, not yet. You have to have 4,000 watch hours, and we are at 1,915 watch hours. So we're almost halfway to having enough watch hours to be eligible to apply for AdSense. Doesn't mean you'll get approved or anything like that, but, you know, people are seeing ads on my videos, which is great, but, yeah, no, I don't make money off of those. YouTube collects that money. Just because there's ads on your videos does not mean you're getting paid for them. You have to meet the minimum subscriber account, which we do have that beat. You have to have 1,000 subscribers, so that's awesome. Appreciate you. But you also have to have 2,000 watch hours. Or, sorry, 4,000 watch hours. We're approaching 2,000. Would love to get another 2,000, so if you guys would just, you know, run the videos on repeat all day. I'm just kidding. But it's 4th of July, and hopefully some people are getting ready for fireworks or have already started getting into it. But enjoy the holiday, be safe, and I will see you in the next one.